Alrighty, let's react to some videos here. Tom Lee, Ron Barron, and some of these other ones. This should be fun reactions. By the way, if you're looking to apply to join private stock group, private wealth group, pin comment down there, click on that, fill out a form, get access to all my premium courses teaching everything I learned up here. So you actually learn from somebody with some experience instead of gambling money in this market.
Great to see you.
Why do you say overreaction?
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like...
So, as a Tesla shareholder for many, many, many years, listen, I don't like when people say that. Oh, did Tesla's, valuation magically go down 15% yesterday, or fundamentals or whatever, right? And the reason I don't like that is because Tesla will make ridiculous upward moves when it doesn't really justify it either. So Tesla stock, the move Tesla stock made to 470 back, a few months ago, that made no sense. Nothing in Tesla's business model and fundamentals would say that move was justified. Nothing, right? And so when you get sell-offs like that, it's the same exact thing, right? So, you can't just have it one way and be like, oh, if it goes down, it shouldn't have done that. No. Also, Tesla's move to 470, that was stupid. That was ridiculous. That was, idiotic move in regards to Tesla. But it happened. It's part of the process.
A lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead. But it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, I think it's an overreaction.
Yeah, how do you best explain that difference between what equities have done and what we've seen in IG and even high yield?
Well, I think on the stock side, markets are now saying, look, the new regime is we have to take the tariffs seriously. Now we don't know how long these tariffs might be. Will it hurt growth? And we've seen cuts from economists. But the bond market is saying, well, you know what? This is a growth scare. But the Fed is also now in a position to begin cutting because inflation pressures are abating. So I think the bond market is sort of pricing in a Fed put. The stock market saying, I'm not sure if there's a White House put, and then the Fed's on hold, and I think that's the divergence.
So which one should we be listening to?
Well, I think the Fed put, in fact, is probably coming back because the odds of a May cut have been inching up. They hit 54% yesterday. And, in fact, total cuts hit 3.5 cuts, which is now 2.5 or 1.5 more than the Fed's guided. But I think that the Trump put exists. I mean, I know they've explicitly said there isn't one, but look at yesterday. Tesla's down 15%, and on Truth Social, Donald Trump talks about Tesla. So I think a put exists. We just don't know the level when the White House intervenes. And then today's the Business Roundtable. We'll find out.
He does, but then he kind of ratchets up the dialogue as it pertains to the trade war this morning on Truth Social, regardless of all of the headlines surrounding tariffs and the trade war and what it means for growth and what it means for the market reaction.
That's right. And for a while, markets ignored those tariff headlines, and now they're taking it very seriously. But I think at the end of the day, if we take every headline at face value, then markets are completely paralyzed. And of course, that again creates opportunity because at some level, all these stocks are really attractive opportunities, especially something that's had a 50% drawdown.
I mean, you can talk about the NASDAQ being an overreaction at a 4% down day, but Tesla was up $500 billion in 2 months at the end of last year. I mean, was that an overreaction to the upside? This is what we're trying to figure out, right?
Thank you. That's my point.
In terms of valuation and investor expectations coming into this period when it's become a little bit more noisy.
Yeah. Well, there used to be this term a while ago called rage selling, and I think these days with instant liquidity, markets have rage selling. And I think it's not just individual. I think institutions push a button and go flat. So I think that, we're getting whipsawed these days. And
but in all due respect, Tom Lee, what do we call this right here? That looks like rage buying. And that was enough off of nothing fundamental. Nothing fundamental was going on there that's like, oh, we got this new big product that's like the game changer that we're going to make so much money on next year. No. Nothing like that, right? So this was rage buying, if we want to call this rage selling, right? Both moves dumb. Like Tesla should be, once again, a Tesla shareholder for 100 years and still own shares in the stock. The stock price should be right now, 125. That would be fair for Tesla, 125. If it went under 125, I'd probably start buying shares. But 125 is a fair price.
But to titrate that, like, was Tesla worth double what it was compared to November, and now is it worth half? I'm not sure, but I think it's somewhere in between.
Meantime, there's still a lot of desk notes about CTA supply and the next 5 days. There's plenty to sell. Are you buyer that even if we bounce today, it's going to be more of a process?
Well, I think positioning does tell us we're stretched to the downside, and we know markets are oversold, and we know sentiment's bad. I guess the real tell is we need to have follow through, because last week felt like we could be bottoming, and we failed Monday. But do I think that, a 10% correction, shouldn't happen? I mean, this is like the sixth correction of 8% or more since 2022. So it is pretty garden variety. But, getting down more than 10% to me is like, we've got proof of a recession. And I think that's why the data points next few weeks are going to matter.
Yeah. So if we do draw down 10, you'll want to talk again.
Yes.
Okay. Tom,
We're
thanks.
close, yeah.
Well, maybe before. Tom Lee, thanks so much.
Thanks.
Yeah, anybody's best bet for the next few days. I mean, and the worst thing, in my opinion, could be to set people up to really get screwed over the next few months is if over the next few days the market continues to go down. Because I think if the market continues to go down, people will keep thinking like, oh, puts. Look at put options. I need to buy puts. I need a short. I need a put. And I think they're just going to get sucked into even a bigger trap. So, we'll see how all that plays out.
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
CEO. He's been, again, a longtime investor, not just in Tesla, but in many other Elon Musk companies. And Ron, thanks for coming in today.
Thanks for inviting me.
Let me ask you very quickly right now how you're feeling about the overall markets. You're a value investor when stocks come prices.
I mean, here's the best way I could explain it to everybody, okay? You want to be, if you're going to bet against stocks and bet against the market, you need to do so when everybody's super bullish on the market and everybody's super bullish on stocks. So when I was placing my hedges on, right, at the end of last year and then the beginning of this year, perfect time to do it. Why? Because everybody was so optimistic. Everybody's just bulled up, right? Markets at pushing all-time highs, valuations insanely high. VIX was dead. And so therefore I was able to buy put option contracts for so cheap. Now the issue is people are not so bullish. Massive amounts of people are bearish. Actually, there's way more people bearish on the market. You look at the latest AI investor sentiment numbers. Now, only 19% of investors are bullish on the market the next 6 months, right? 60% roughly are bearish on the market the next 6 months. Like everybody's freaking bearish now. And the VIX has exploded. So now if you're going to buy put option contracts, you're paying through the roof for those prices. It's ridiculous. Which means because anybody that wants to sell put options, right, they want to get massive premiums for them because they're like, I'm taking a big risk here. What if the market goes into a full-scale crash, right? And so therefore, these people that are buying all these puts right now are having to pay astronomically high prices for them. It's not the great time. Like you missed it. Now you're late. And so now the thing is, even if you get a small-scale crash, a lot of these put options still won't make people very much money, because they're paying such huge premiums. They need these stock prices now to go down so substantially to make any real money, which makes a very bad risk-reward profile. If you're counting on a stock market crash to make your puts make money, you're not doing it right. You're not doing it right. In order to make money on put option contracts, you've got to go in with the assumption of these could make me money even if the market doesn't tank in any meaningful way. If you want to say, okay, take it a step further, a correction. But if you need a crash to make money, you're in trouble by that point in time, right? That means you paid way too much for your premiums, and that's what's going on with people that are buying all these puts right now.
Down, sometimes value investors get pretty excited. How do you feel about things?
It makes people very unsettled right now, all the things that are happening so quickly. I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Not intentional to drive the stock market down, to get to a different place for the economy.
Well, everything.
Yeah.
I think it might even be intentional to try to slow down the economy, get rid of inflation. First-term president, the first thing you do is try to do things that are going to be unattractive to your constituents, if you're running for election. But you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. Those are the things that we look at.
So you're on a buying spree right now?
I didn't say I was in a buying spree. I just said I can't believe how cheap things. I own a lot of things. I'm a long-term investor. It was interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. Mm-hmm. And you were asking him, great shirts he has all the time, I guess. But you were asking him about what he thought about Tesla. And I said, well, for a 4-week horizon?
Yeah.
A 4-week horizon. So that was his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Yeah, but I mean, he was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on. At $1.1 billion, that's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robo-taxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything. But then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a...
something I don't like that he just said there was kind of like pinning it on, worries about recession, worries about, cars being bought, things like that. Listen, Tesla numbers have been trash before all this recession fear and talk and all this stuff's going on and tariffs and this and that. Tesla numbers been trash. Like really disappointing, horrible numbers. Quarter after quarter for a while now at this point in time. And so let's not just pin it on whatever's the more recent stuff because it's been bad.
Year from now to the fundamentals of the business, meaning are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the robotaxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though. First of all, that we're investors in people for the long term. Question everything. Don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years. Own it. We own things. We don't buy and sell things. As far as the fundamentals go, so I want to make sure we talk about other people, too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
A major guy. So his business, and you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use over and over without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that, this was a really interesting time to buy because the the software is working. Waymo, when they have cars, you have to have a $150,000, $200,000 car. Our car is, $35,000 car, and it's software. It's software and cameras. And so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one.
I hope. We're still waiting, Ron. We're still waiting. As a Tesla owner for many, many years, that owns 2 Teslas. I'm still waiting.
The fundamentals, the changes, is that, so historically what we did is, what Tesla did is they built a facility in China. They bought this junky place that was bankrupted by Toyota and General Motors in California, and all the union workers were fired. Hear that, Joe Biden? All the union workers were fired. And then every single one lost their jobs. And then we take over this plant, and they go look at it for the first time after he buys this thing for a distressed price. They spent $1 billion on it. It cost us $20 or $30 million to buy it. And then they go to see it, and Elon says, yeah, let's go look at this place we bought. And it's a huge facility, 5 million square feet. And they can't get into it. They finally get inside, and they go with one of his friends from college as a director, and they open the door, and they look inside, and it's dark and dismal, and it's drugs and prostitution, and it's crazy stuff inside of that place.
No wonder Elon bought the damn place. Oh my gosh!
Around, and it's incredibly dark, and Elon's looking around. He says, "Well, what we're going to do is we take off the roof here. We're going to make it."
He's like, "Hey guys, the party ended last night. You were supposed to be out of here by now. Bring Ron Barron by, man."
White, and we have the production line running there, and so they learn how to build it. And it was making 400,000 or 500,000 cars a year, 600,000 cars. Then they go out and they build a facility in Shanghai. And it cost them $7 billion to build it for 1 million cars. And that factory was making $15,000 in profit a car. Investing $7 billion, making $15 billion a year. And then price cut after price cut after price cut. Chinese are incredible competitors. I don't understand how American car companies will survive, except for Tesla. And so... I'm going too long.
But,
no.
Ron, let me just ask.
But anyway, the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you're going to robo cars, and every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1.8 million cars. Now, all of a sudden, you're keeping the cars and making them robo-taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles, will generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year for 1 million cars.
Okay, so once again, this is another thing that frustrates me so much as a Tesla investor, is how unrealistic we are. We don't even have the technology done yet. The technology is not even done. We haven't even gotten the cars to be able to get to a place where it drives far better than a human. That's still a work in progress. So at some point, I think Tesla will get it done. I think they will. Is it this year, next year, the year after? I don't know, okay? But my thought is they're going to eventually get that done. But the tech's not done, which means we can't even begin to run numbers on this. And it frustrates me so bad. We're going to do this. We're going to get this much per mile. And we're going to dude, we don't even have the tech done. We don't know what we're going to be able to realistically charge when that time does come, and we can scale this up into some big thing, whether that's in a year from now or 3 years from now or 5 years from now or 7 years from now. So to start running numbers and be like, we're going to be able to make this much and it's going to work this and this. There's going to be 1 million problems here. There's going to be 1 million issues. There's going to be a lot of crap that has to be dealt with, okay? And so to just start running with these numbers and these projections, and I've been watching Tesla investors do this for years, and here we are years later, and we still don't even have the tech done. Never mind the numbers. This is a long-term, long thing that's been taking forever to get ready. It's still taking forever. And at some point, this will be scaled up. Maybe it's 5 years from now, 3 years from now, 10 years from now. Some point, I think they'll have it scaled up. It'll be a big thing, but how much money does it make? I don't know. We'll see. Don't just go, throwing stuff around when we don't even have a product in the market yet. That's the big issue, okay?
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
Alrighty, so why are we seeing such big moves here? Planet was up over 10% here today. ELF was up almost 10%, 9.7%. Celsius, 7.7% move. 6% move in Fubo. Palantir was up over 5%. Revolve up over 4%. PayPal 3.5%. Big moves. And it wasn't like the market had some banger, like, oh my gosh, the market skyrocketed today. No. Okay, so why is that going on? Let me explain this, okay? Listen, when the market has a major sell-off like that, whenever you get rallies coming off of that, the moves are absolutely incredible. Now, let's assume today was the bottom and we head up from here over the next several months, okay? The most dramatic moves you would get are over basically the next few weeks. That doesn't mean there's no money to be made after the next few weeks, but the most dramatic moves are that first initial weeks. Now, we might not have hit the bottom yet. Maybe we hit the bottom a few weeks from now or a few months from now, okay? But the moral of the story is, whenever you hit that bottom, the moves are dramatic. And you got to understand, remember Tom Lee talks about this, and everybody that's in the stock market talks about this, right? The top 10 best days. Many of those top 10 best days you ever get for the market is right after a correction in the market, right after a crash in the market, right after major sell-offs in the market. You get some insane snapbacks in stocks, where all of a sudden a stock will go up 5, 10, 15% like that. And all of a sudden, in a matter of 3 weeks could go by and a stock's up 33%. And it's like, whoa, okay. Wow, that's incredible, right? So just as quickly as they fall, they can rise almost as quick. Not quite, but pretty dang close, okay? So that's the thing to always remember. And that's why, you just have to stay invested. You have to stay buying the dip whenever you're going through a correction in the market, a crash in the market, because when things do flip, and you never know when it's the real flip versus a fake out rally, right? Like today, could have been a fake out rally. Maybe we got lower to go, or maybe this is a real deal flip day. At the end of the day, you're not going to know when it's the real flip versus a fake flip, right? And so that's why you stay invested, because when it is the real flip, I mean, like I said, stocks will move 20, 30, 40, 50%. When it comes, especially a lot of these beaten down stocks, they'll move that in a few weeks. It won't take them months. It won't take them years. No, they'll move in a matter. They'll give you the returns that you would expect in the S&P 500, over a 5-year span. Some of these individual stocks will give you that in a 5-week span. I'm not kidding you. Like, it happens time and time again. You look at any corrections coming off of that in crashes. Oh my gosh, it's incredible. Okay. Next thing up here, Costco. We slayed the dragon. Very fortunate to have slayed those 2 dragons. One was Walmart, one was Costco. Tough ones to slay, man, but we did it. So did I sell all my Costco puts? Why or why not? And then am I going to buy any, I'll show you the stocks I bought, okay? So first off, in regards to Costco, here was my put options in the public account. Yes, I sold them all off. I basically hedged with $14,500, and I got proceeds of $24,000 out of that. So that was a gain of $9,591. And then obviously the Walmart put options, those ones appreciated pretty greatly as well. And I sold out of those ones with $7,392. This is what we're looking at for gains already. This is the P&L of the of the public account so far this year. So we already have taken $305,000 worth of gains so far in the public account this year. So yeah, it should be a pretty banger year overall in regards to profits taken. And then in I did have some put options in a private portfolio, and I did sell out of those as well. Okay, and so that one was just $3,400. It was a much smaller hedge in regards to this one. And this, proceeds of that were $6,800. So we made about $3,300 on that one, right? So, am I out of the Costco put options completely now? The answer to that is yes, 100% out. So whatever happens with Costco, cool. Like if Costco keeps going down, which, that could very well be, like, cool. Like, doesn't mean anything to me. If Costco starts bounce back, doesn't mean anything to me. Like, I don't care. Like, I literally don't care. So whatever happens with Costco stock now, I don't care. That doesn't mean if, let's say Costco bounces back strong, that doesn't mean I won't consider rehedging, in a few months from now or later this year or something like that. We'll see. Like, I'll still keep an eye on it, but as far as where Costco stock goes, it means nothing to me now at this point in time. We've made our money. And as I tell you guys with these hedges, man, you make your money, you get out. You make your money, you get out. You don't get greedy with these hedges. You can get greedy with your longs. Don't get greedy with, hedges because you're just under time constraints. And so if you get to make 50% on your money, 70%, 100%, dude, out. Take it and run. Like, I get to make, almost 100% on some of these, and it's like, peace, I'm out. Like, I'm good with that. Thank you very much. I'm not going to hold out and say, well, maybe it could go down a little more this week, so maybe I can make 200%. Like, that's fine. Somebody else can go make that money. I'm not risking the farm because you got to understand, if Costco stock also starts to come back next week, or let's just say stops going down, these put options will go to zero. Right? So all of a sudden you take from, almost $7,000 of proceeds to $0 in a week. And that money's not coming back. It's not like a long position that goes down and you're like, oh, it's going to come back. Let's say you buy, Meta stock and you buy it at 605 and it goes down to 595. You're like, dang, man, I'm down on this stock. Meta's probably going to 1,000 and probably multi-thousand over the next few years. Doesn't matter. With a put option, that money's gone forever. It's not coming back. Okay. So don't get greedy.